Hi, this is James Shug with Westpac London's end of day report for Thursday, the 14th of February. The day didn't start off too well with Japanese GDP contracting in the fourth quarter against expectations of a small rise, and the theme continued in Europe with Euroland GDP coming in at minus 0.6% in the fourth quarter. That's the fifth straight quarter of contraction, which means that the current recession now matches the length, though not the depth, of the 2008-2009 economic slump. The underlying national data, which was actually released a little bit earlier than the Eurozone aggregate figures, for Germany, France, Italy, the Netherlands and Greece, was mostly disappointing. Germany missed its 0.5% decline expectation or consensus, came in at minus 0.6. France was also 0.1 weaker at minus 0.3. Italy was 0.3 weaker at minus 0.9. Oh, and Portugal, which was forecast at a consensus of minus 1%, came in at minus 1.8% in the quarter. Greece doesn't have quarterly data, but its annual pace of contraction was minus 6%. That compares to a minus 9% a few years ago at the depth of the downturn there. So Greece is still slowing, but it's not as rapid a pace as it was a year or two ago. The Netherlands came in a bit better than expected. They still shrank, minus 0.2%, but not the minus 0.3% consensus. So overall, disappointing numbers, and you can see it in the euro and also in the European equity markets. Sort of a step down taking place as first the German figures, then the French figures, and then the Italian figures, and then the European figures came out. You'd think by the time the European ones had come out that they would have worked out it was going to miss expectations, but the currency continued to sell off in another step down then. So that set the tone for European markets and indeed for the US Open, although US losses have been pared back a bit by the release of the initial jobless claims figures for the latest week. First full week in February ended February 9. They were down 27,000 to 341,000. So given that the Labor Department didn't say there were seasonal distortions at play like they did when claims were quite volatile in January, that suggests that there genuinely were fewer layoffs at the start of February. So that was a positive. And apart from some merger and takeover news in the airline sector and the food sector, and also I think some earnings reports, Cisco missed expectations. They were the main stories today so far. We've got the G20 meeting in Moscow to look forward to over the next 2 days. We may see something emerge from there related to guidance, really how governments should run their economic policies with respect to currencies. So on that note, I'll give you the figures for the day. The FTSE in London closed down a third of a percent. Not closed, we're ahead of the close. It's 3 o'clock in the afternoon. So the FTSE in London down 0.6% so far. The French market down 0.7%. Germany's down 1.2%. Spain down 1.7%, and it's Italy down 1.1%. And the Dow at the moment is off 0.2%. The level being just under 14,000. It was 13,957. Commodity markets. Look, copper prices are unchanged. On this measure here, there may be an error on this sheet, but I can't get a price change for copper. But we've got oil prices up 0.4% at $97.40 a barrel, and gold is up 0.25% at $1,649 an ounce. The Aussie dollar, it's at 1.035 at the moment. So you can actually see it fall when the GDP figures for Europe were coming out. Fell from around its current level actually to 1.033. So look, 20 or 30 basis points, and it's since recovered it as the session wore on. We had those US numbers released. All right, that's it from me today, and indeed for the next couple of days. I'm out of the office on Friday and Monday, so the next end-of-day report you should expect on Tuesday, or for it to be for Tuesday next week. That'll be the the 19th of February. Okay, so look forward to seeing you then. Bye.